Hi everyone, and welcome to a 20-minute power play. Our last episode got tremendous feedback and a lot of support, so thank you for all that. For all the newcomers to this video, what we're doing is pretty much putting what we think is the most important news of the last month, and also some sentiment and mindset topics that we want to bring up that we are currently discussing with our clients on and providing support. So this of course is a free video, and we'll bring you as much as we can within the 20 minutes. I'll have the stopwatch going, so let's crack straight in, because I want to give you as much content as possible and get into the good stuff first of all. So fear and greed index, I'm going to look at it almost every single time we do a video, because it's so important to gauge the sentiment of the Bitcoin and crypto market. Currently, you can see from these numbers that we are in the doldrums. We've had a sustained period of fear and panic, and that is reflective in the data where you see people that have bought Bitcoin up until about the 65,000 mark, from around the $20,000 mark. A lot of those new holders of those coins are panic selling. So, you know, it's a lot of panic and a lot of new people that may have FOMO'd into this market at the wrong time and then just can't handle the volatility. So that is a big one that we educate our clients on, is about how to handle the volatility and how to mitigate that in terms of your long-term investment thesis. So yeah, looking at those numbers, not very good, but you can totally understand that this is happening because we have been ranging between 30,000 and 40,000 consistently. We'll be hitting at the top, and you can see every time we hit, say, the ceiling and the base of this range, even one green candle, one red candle, the sentiment can shift on an absolute dime. It can just go whoop. It's like a whipsaw up and forth. You look on Twitter, you look at some of the many Facebook groups that you are a part of, and you can see the sentiment in the retail investors change. And a lot of these people are holding on to coins, you know, for dear life. They have no idea about what to do in situations where the market turns incredibly volatile or the bull trend turns into a bear trend. And that's when a lot of people can get into trouble, especially when they're investing more than they can afford to lose. And the old, you know, just continue to buy the dip can get you into a heck of a lot of trouble if the market does turn into a full-blown bear market, where you are just continuously putting money into potentially illiquid altcoins that you haven't done the right research on. We'll get to that a bit later. But yes, the fear and greed index, as it's hitting these ceilings, the market is just turning, you know, whipsawing with that sentiment. So, you know, it's no wonder that we're seeing a lot of panic selling and a lot of fear in this market. And I discussed this last time on our video. When we see a fear and greed index indicator you know, hover at an extreme for too long, the market will inevitably swing to the other side. There will be a relief rally. It happens in all markets. It's just when that is. And we're approaching a phase now in this, you could say, reaccumulation period, if you believe in the Wyckoff accumulation pattern, that we are about to see either a decisive move to the upside or a decisive move to the downside. So what we'll do, we'll go into the charts and just have a quick look here. So the past month actually has been pretty uneventful. It's just been ranging. Now, again, a lot of people come to this market in a pretty uneducated state, and they'll be looking at this either as bag holders or looking for, you know, that overnight millionaire success. So they may look at trading, and a lot of people have been chopped in this, getting themselves into a lot of trouble doing derivatives, especially, you know, high leverage futures. So, you know, 100x is possible on Binance, and that just gets people into so much trouble. And, you know, you could start to see a green candle start to get incredibly bullish, get a bit complacent, don't put a stop loss in, and you just let it go. And then all of a sudden we hit the ceiling of the range. And you may not be very good at technicals. You just see a green candle, you go, yes, buy long, and all of a sudden the market reverses by about, you know, $6,000 to $10,000, and you are totally liquidated and you're absolutely wrecked. What we've been seeing over this past month, yes, again, that range, but it's been falling into what I think is a descending triangle. So it's moving downwards slightly. We had a bit of a fake out on the breakout there to hit the 200 EMA. Look, we will not see a decisive move either way unless we break either that range at the top, the 39,000, and get above that 50 EMA and 200 EMA on the daily, or we have that fall beneath that $30,000 level, which appears to be pretty strong. We've had a couple of capitulations, you know, 1 and 2, and then we've had another touch there. Now, there is a saying, if you test an area too many times, it weakens it and eventually you will fall through. However, we know from on-chain data and looking at order books on exchanges that there are a heck of a lot of orders placed beneath 29,000. So the bears really want to step on the gas if they want to push this market down and really create some serious panic. Now, that is absolutely possible if traditional markets suddenly turn quite bearish and we see the S&P 500 and other stocks just really roar with the amount of QE and asset buybacks that are going on. I really haven't seen much down period. So if that turns, then yes, Bitcoin and crypto is still regarded as a risk-on asset class, and this will turn. It just will, because a lot of money in this market will get evaporated. It will suck straight out of altcoins and Bitcoin and then go back into the US dollar, and that is how that will move. But here, yes, we just want to see a decisive move, and right now you cannot tell either way. It is stuck really in no man's land in between this ranging area. But if we see a break above this descending triangle, retest for support, we could get some action above, but we just don't know yet. And likewise here, we are seeing resistance here at this key trend line at 34,000 and also the top of this triangle. If this triangle is be respected, then I'd say we come back down in range to the bottom, maybe 32, 30,000, but that is all speculation. This is just looking at the charts. And I want to move on there because I want to show you how liquidity works, because as we were talking about before, there are a lot of uneducated investors moving into crypto, especially in the past 6 months, hearing about these incredible gains, and it is exactly the same as 2017. Although in 2017, the real boom was ICOs through Ethereum. So we can use that as a guidepost to what's happening now, and it pretty much is happening almost exactly the same as now, but the dynamics are slightly different. However, a lot of people do not understand the flow of capital and how it moves. And you see a lot in these, retail groups complaining about, why does my altcoin that I'm holding go down so much when Bitcoin's down a bit? Why can't it decouple? Why can't it do its own thing? And that's because the market is so tightly correlated to the movement of Bitcoin. The capital flows through Bitcoin first in most instances now, until the on and off ramps for altcoins start to, get to some really high volumes and levels. They will not decouple and do their own thing for quite some time. But in most all cases, and I want to keep this super simple, fiat, so government issued currency, moves through an exchange into the market and goes into Bitcoin. They might do that all from the back end. They might buy Bitcoin first, then buy an altcoin with that Bitcoin for you. But when you purchase, it will just say you're buying, let's just say XRP with US dollars or AUD. They may actually go through Bitcoin depending on the exchange. So USD and government currency will go from fiat, Bitcoin, then into large caps, mid caps, and low caps. Now, this here is just the flow. This is how generally cycles work within in the market currently in, let's say, in the bull trend up towards $60,000. This is how it would go. So Bitcoin would have its move, then it would settle and go a bit sideways. Then that money would flow into the large caps. Then it would flow into the mid caps. Then it would flow into the very low caps. And then it gets sucked back in the reverse. So if Bitcoin starts to move, the oxygen, and when I say oxygen, the capital from a lot of those low, mid, and large caps starts to remove itself. So if Bitcoin suddenly has a bit of volatility to the downside, then investors or traders in the low caps, mid caps will suddenly sell those and move back into Bitcoin. And depending on how the market is looking, they may sell that Bitcoin then and go back into fiat. So it moves through the market like that, through the risk profiles. So large caps are less risky, mid caps are riskier, and low caps are super risky, and it will get sucked out back in reverse from those risk categories. So you just have to be aware about how the market moves when Bitcoin has volatility. And then Bitcoin is coupled to traditional finance volatility as well. So, and there is a theory that Bitcoin is not correlated to traditional finance, but in many cases it is. So just pay attention to that and how the capital does flow a lot of these cryptocurrencies, because it pretty much replicates this chart time and time again. And you can get caught holding a lot of people move in and buy the cheapest thing possible. There's a lot of unit bias. They buy like the Dogecoin or another cryptocurrency that might be really, really low and has a great sentiment or narrative and community around it. But then they'll be holding it and wondering why it just keeps going down. And then Bitcoin's the only one maybe moving up a little and going down a little, and especially when it's chopping sideways, it can frustrate the hell out of a lot of new investors, and you don't know why. And this is what we educate our clients around, how to sort of mitigate that and prepare yourself for those periods of the market and those mini cycles within cycles, how to, remove yourself and take profit and mitigate the risk of you holding too much risk down the bottom. Okay, another thing I want to just quickly discuss on is hero worship. So hero worship is not a good investment strategy. And the example I want to just bring up for you here is probably Elon Musk. So if you're basing your entire investment strategy around someone's tweets or his or news or outbursts, that is a way you can play the market if you want, but it is highly, highly risky and will move in very short windows of positivity. And then on the flip side, your risk is that you're putting all your eggs in one basket and you have no control over what happens. So Elon Musk could tomorrow come out and say Doge is worthless. It was all a joke. I'm selling my entire holding. What do you think is going to happen to the price of Doge? It's going to absolutely crater through the floor. Now, we can see via cycles previously that Dogecoin does run in these real big pumps and dumps. So you can see here, since the real run up in that last bull trend, since Musk was tweeting about it a lot, it's just been trending downwards. And this is what a lot of investors have done. They've bought Dogecoin in a peak state, up in these green candles, and then they've been holding on all the way down for an 80% drawdown. Now, this is all because in many instances, they're worshiping, Elon Musk. Now, you can think about what you like about Elon Musk, but, taking advice from a single person that has so much influence on your investment is a recipe for disaster. Now, I know a lot of people only chucking, what they can afford to lose, $100 here, $200 there, but a lot of people have put far more than that, savings, sold houses and bought Doge, things like this. There was one person in the US that made millions and millions of dollars, and he's held it all the way down. And I don't think he's a millionaire anymore. And he was, living in his mum's basement and whatnot, and did not take any profit. So hero worship is not a good investment strategy. So just keep that in mind. And to a degree, there is that with someone like a Michael Saylor as well. So he's put basically his entire future, the future of his company MicroStrategy, in the hands of Bitcoin. Now he's happy with that. He's done his due diligence. He had his conviction. But the market is not dependent on him to move. So he can say he's bought, $1 billion worth, and it happened not long ago. The market barely flinched. So the market's not moving on him at all. And there's a lot of other people buying Bitcoin to mitigate that. Also, Bitcoin does not have a known creator currently. So, there's that risk has largely been pulled out of that side of the market. But something like a Dogecoin, when you have someone so visible and vocal, yeah, it's a recipe for disaster if you're putting all your eggs in that one basket, and you've got to mitigate that risk. That has to be on your lower end scale, where I know a lot of people in this market have just bought Dogecoin. They're also buying little Dogecoin, Shiba Inu, and these are all copies of Dogecoin without doing fundamental analysis on what the actual coin does. Most people wouldn't even know what the actual supply of a Dogecoin is, which is unlimited. Most people wouldn't know the supply of a Shiba Inu. Some of these token supplies are so high that for that price to rise, you're going to need an exponential amount of people to come in to sustain the price to go higher. Now, that might happen. You might make a lot of money from it, but is that a sound strategy for the long term? I don't think so. And you got to be prepared that if you're buying it, you're just going to hold it all the way down. Otherwise, you need to be taking profits on the way up and using this as having that as part of your strategy in the game theory of it. You're banking on that this is a totally sentiment-driven crypto, and you need to have a plan and a strategy to action on that. Okay, I want to just discuss also. Yeah, because like I said, with that, the baby Doge and Shiba Inu, a lot of these coins are just popping up and sucking a lot of people to them. And I just want to stress: are you approaching this market from a powerful position or not? Are you approaching this market from a point of looking at the data, or are you approaching this market from gut feel, listening to your best friends, listening to your circles that may not have expertise in this? Are people just firing from the hip, buying whatever they can that's cheap, and just riding it up, riding it down? Does that sound like a sophisticated investor's MO? I don't think so. It's not a good way to succeed in the mid to long term at all. And if you don't have an understanding of cycles, how crypto works, how the capital flow works, and a host of other indicators and reasons behind how this market moves and operates, you're going to be in for a very hard time. And then you're going to get very jaded, you're going to get very frustrated, you're going to get very angry, and you'll end up likely just panic selling when it's worthless just before the market has a massive turn, and you'll be just hating life after that point. So that's just part of my thoughts on that. You want to be approaching this market from the most powerful position possible, and something we cover with our clients, almost ad nauseum. You want to have the correct mindset. You also want to be making data-driven decisions, so you're not putting yourself in a potentially financially devastating position, which a lot of people are, according to some of the groups. Okay, let's go on to some of the biggest news of the month. And I've only got 3 here. There's been so many more, but we've only got 20 minutes. I'm just going to run through. So potentially the biggest news for Bitcoin in its history was El Salvador is the first in the world to make Bitcoin legal tender. So they are a dollar standard nation. So they use the US dollar, but they are now coupling that with Bitcoin. Everyone in the country is now forced to accept Bitcoin. If you own a merchant stand, if you own a business, you have to accept Bitcoin. You can pay anyone in Bitcoin. You can also pay bills in Bitcoin. So this is a massive, massive move. It also creates some very interesting dynamics on a macro sense. You've got the IMF coming in saying they're not going to give El Salvador their $1 billion loan because they're adopting Bitcoin, or they see it so risky that they're taking this massive move without consultation with anyone. And also a host of other issues in terms of, suddenly, if a sovereign nation has adopted Bitcoin as legal tender, what does that mean for other nations as well? If people want to buy Bitcoin, suddenly it is a foreign currency under tax law and things like that. Now, that hasn't advanced too much further, and we will see later in the month when it does officially become legal tender, but it's totally past Parliament. It's a super, super interesting petri dish of Bitcoin success or failure, because a lot of people, keep saying, oh, well, Bitcoin can't be used, in fast transactions, it's super expensive. While that may be true on layer 1, there is actually something called layer 2 on the Lightning Network, which makes, almost instant transactions and makes it almost free. And that is what's being implemented at El Salvador. And it has been running there successfully in smaller communities for a very, very long time. And when I say long time, that's a few years. So it's being tried and tested. And there are segments of the community there that don't even use US dollars anymore. It's all in Bitcoin. They're using it to save. Now, we know Bitcoin is up 200% on average per year. So that makes sense for some of these nations which, may or may not have a, solid currency. Now, El Salvador, again, had the US dollar standard, but we know that about 70% are unbanked in El Salvador. So, this brings in a really interesting and fascinating area where a lot of those people may suddenly be able to bank themselves with Bitcoin, because the smartphone penetration in El Salvador is incredibly high. So, they may not have a bank account, but they have a smartphone where suddenly they can be brought into the economy and can foster the economy that way, which is really, really interesting. Now, further to this, when I mentioned the IMF loan, the president of El Salvador, Bukele, said that they're going to use geothermal energy. So they have a volcano, they have maybe a few volcanoes in El Salvador, and they're going to potentially create what's called volcano bonds. So they're going to mine Bitcoin with geothermal energy, which is basically free, just cancels that FUD, that green FUD that's been around for so long. Bitcoin uses so much energy and it's killing the environment, yada, yada, yada. But they're going to mine Bitcoin geothermal energy and create bonds on the future profits of those that mining process. And they're going to raise enough money to not need the IMF's $1 billion loan. That's the theory anyways. Again, it's going to be a super exciting petri dish of how the success or failure of Bitcoin in a sovereign nation. It's going to be absolutely wild. Now, other nations have also voiced their support, including some politicians in Paraguay, Mexico, and surrounding nations. But probably the next country that may move is actually Tonga. So the president or overlord of Lord Futisa from Tonga, he has voiced on Twitter that he is looking to bring Bitcoin tender legislation soon in their country. So we're going to see if this does catch on like a domino effect, but we're going to have to wait and see. And I would observe caution on this, but El Salvador is where it's at, and we really want to watch how this progresses because it is super, super exciting for Bitcoin. Okay, now still on El Salvador, to really spur this adoption, they are handing out around $30 US worth of Bitcoin to every single citizen to get them on board, to get them used to it. They're also investing a lot into the research and education side of using Bitcoin in the economy. So, they're really going all out to do this. They're also going to slowly acquire Bitcoin in their treasury. They're not being crazy and converting their entire US treasury into Bitcoin, they are acquiring it very, very slowly. So that is very, very interesting as well. They are mitigating their risks somewhat, which is great. And yeah, we're just going to have to see how this plays out. And if, a year's time from now, Bitcoin hasn't really taken off, the adoption hasn't spiked, maybe we have to look at it as a bit of a failure. But so far, this is very, very exciting. Okay, now without a doubt, the second biggest news of the month was China's huge move to crack down on crypto and mainly Bitcoin mining in the country. Now, there was a bit of a narrative going around that it was because of the energy that it had being used, etc. But more data has come out to suggest that they are releasing their central bank digital token soon, so a digital yuan very, very soon. And Bitcoin is a direct competitor to that. In fact, it's the total opposite to it. Decentralized, not controlled by a government, whereas the digital yuan is pretty dystopian. They can see your spending habits, they can put utility on it, so they can judge how long the currency can last for. They can put expirations on a currency. They can say X amount of your paycheck can only be used on your rent or food. So, incredibly wild stuff. You have to wonder how many people in China would actually want Bitcoin, because it removes them from that system or impending system. Can you imagine how many people in Hong Kong would probably want to buy Bitcoin to maybe exit that? But, it's happening so quickly. China's crackdown was probably always going to come with the digital yuan coming. So really, really interesting. But we now know that crackdown on Bitcoin mining has removed about 90% of the mining power from China. So insane. And we now know that a lot of hydroelectric plants, and especially Sichuan, the province in China, where a lot of Bitcoin mining was being completed, they're now being sold because they now know they don't have the miners using it, and those plants are being sold. They're no longer being used. So yeah, pretty crazy. So miners are now diversifying geographically. They're going Kazakhstan, they're moving to the West. This is incredibly good for the long-term future of Bitcoin. We've seen the hash rate basically halve, if not a little bit greater. But then we had the difficulty adjustment, which brought everything back into parity. The market can then move at a sustainable level again, and the miners are all earning a fair amount. But before, there was a big disparity with hash rate. We won't get into that, but that was pretty interesting. On the last few crashes in hash rate, namely COVID, we've seen an incredible uptick in the market after hash rate has had its difficulty adjustment. So that is something to watch as well. But this latest move overnight, so we had the miners, we've also had overnight the Central Bank of China is disallowing transfers to crypto businesses. They're also disallowing advertisements for crypto business. There's an incredible amount of power that the Central Bank of China has, and they're obviously run by the state. So this is all coming from the top and filtering down. They clearly do not want cryptocurrency really thriving in their market unless they can tick it off as undamaging to the state, or it doesn't promote dissidents. So that is just something to be aware of. But you know what? In the end, this is a fantastic stress test. An entire nation, if not the nation with the most miners on the planet, has decided to effectively kill Bitcoin. And what's happened, the market has just bounced back even stronger. Yes, we're still ranging. A lot of the movement down was from the sentiment and miners capitulating from the high and selling off because of liquidation and needing to fund their relocation. So, all that data needs to come into what's happening, and you need to look at it from a real broad perspective and just take a step back for a second, because what's happening is pretty profound. And this could be one of the best things to happen to Bitcoin over its lifespan, decentralizing from China, because a lot of the issues surrounding Chinese adoption, even from a PR standpoint, was the centralization of miners in China, whether that be perceived or realistic, it was there. And now it's really freeing up the West to maybe embrace it a bit more. And that hash rate is going to move, to places like El Salvador, where they can mine it for basically nothing through geothermal energy, places like Canada with a lot of hydro, places like Iceland where they have geothermal energy there as well. So this is really, really exciting for the future of crypto. Now, you should look into this a bit more, because it is super, super exciting for the long-term staying power of the market. So if you're worried that, one day China was just going to kill crypto, well, that's gone now, because they've tried, they've thrown their absolute best at it, haven't been able to kill, say, Bitcoin. So we'll have to see how this plays out, but that is how I'm seeing this. That's my interpretation of it. Yeah, super exciting across the board. Now, guys, I think that's probably 20 minutes. We probably could discuss another 100 items today, I've had a blast as always. Leave your comments and feedback below. Let me know what you think, and we'll be back next month for the first Wednesday of the month for our next edition of the 20-minute Power Play. So have a great day, guys.